My name's Dave DeBoe, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey, folks, welcome back. Today, zooming in from Utah, we have a very interesting real estate entrepreneur. Kevin Thueson is doing something a little bit different. He is focusing on outdoor hospitality recreation properties. I hope I got the wording right there, Kevin. And today we're going to be talking about how to cash in on campgrounds. So, Kevin, welcome to the show. Great to have you.
Thanks, Dave. Awesome to be here.
Awesome. So give us an idea, snapshot. What does your portfolio look like as of January 2025? What do you have in there?
We are a couple weeks away from closing on our 9th campground. We have sold one, so this will be our 10th acquisition, but our portfolio will consist of 9 campgrounds here in a couple of weeks. All of our properties are KOA franchises. So if you're familiar with Campgrounds of America, all independently owned and operated franchise system. And we're spread out everywhere from Utah to Wyoming, all the way out to Arkansas, Pennsylvania, geographically a little bit all over the place.
And how long ago did you get started with campgrounds, Kevin?
2018. I bought my first campground in May of 2018. And now, that's the one that I've sold about a year and a half ago.
Now, were you doing something different in real estate, or was that your first foray into real estate investing?
That was the first. I was a CPA in public accounting for 10 years with PricewaterhouseCoopers. And I sold my house, quit my job, then bought a campground in that order.
Sounds like you had a kind of a crisis of identity or something happened kind of all at one time there.
Absolutely. Yeah.
I hear you, man. That is awesome. Well, and I know you're a very outdoorsy kind of person, so investing and owning campgrounds seems like it kind of fits right in with your personality and what you like to do.
It was completely intentional. When I really wanted to get into real estate, I did all kinds of research about different asset classes, what would be a good financial investment, what could I do to make the shift from full-time W-2 to full-time real estate, in one transaction. And it was throughout that process that I figured, if I'm going to do this, if I'm going to build a business around this and do something that is big, I want it to be something that I'm passionate about. And that's when, the opportunity kind of, I don't want to say it fell in my lap, but I found the right deal in the right place at the right time, seller financing, and it led me on this path of, all right, if I were to look at campgrounds, which I hadn't really considered at that point, what does that look like? And then all of a sudden, hey, I can scale this, I can build this around a lifestyle that is what I want to be doing. Where, it's no longer I go to work and I do this, and then when I have free time, these are the things I do. Now it's all kind of together. Obviously still running a business, but it was very intentional of how do I take the things I love about life that I love doing and build a business around that that's going to be financially beneficial for me. It's going to be something that I can provide career opportunities to others, that we could scale, we could grow, that will cash flow, be a good real estate investment. And it's kind of the best of all of those worlds.
Smart. Very, very good. So that first campground deal, did that completely cover the W-2 job situation, or did it take a couple of them to replace that income?
It did not. And so we kind of scraped together for a while. But a lot of that was we were reinvesting back into the park. That first year, we took a big pay cut from what I was making before. And I set up a consulting business on the side and was doing some accounting work to make ends meet for, a year and a half. give or take. When you're in those situations, you've got to make it work. And so we did what we had to make it work. But we reinvested significantly back into it where we could have pulled more money out. We could have tried to, maximize the cash flow to us. And, our vision and the way that we approach this business is the more you reinvest, obviously, the bigger the payoff's going to be later on. And, our case study of that park in particular shows the value of putting that money back in. So it took a while to get back to where we were financially on a monthly income basis, but a lot of that's because we're sacrificing and reinvesting in the future and into more parks and trying to
That
build equity over
that's the
cash flow
difference
today.
between an entrepreneur and an employee, right?
Yeah.
That's crash course on that.
Mm.
So Kevin, you're saying we are you doing this with uh, partners or what does that look like?
I am now.
Yeah.
When I first started, and I say we, it was my whole family, and
Okay.
so this isn't the type of business or lifestyle or investment where it's just me. It
Mhm.
doesn't affect any of them. So we uprooted, we moved. I was living on the campground for an extended period of time that first year. I'd bring my kids down to work with me, and so kind of started out. My kids were a little bit younger then as really a family business. So it definitely is a we, and I have to approach it that way. But I do have partners now, and a couple years into that business, I was able to pull some equity out, bring on a partner. We bought two more. And then we started KCN about a year later, and that's when we went out and raised capital, and we're using investors to fund our deals.
Very, very cool. So Kevin, maybe paint us a picture of what does a typical campground kind of look like? Where are they located? What are the amenities? Who are your who are your guests or your clients? Are they short term? Are they long term? Are they what paint us a picture of what that one of those would look like?
So our parks are a little bit unique in some ways, but a general KOA campground, the majority of the business is going to be RV. A lot of times people think campground, they're thinking state park or national park, primitive camping, pit toilets, that type of thing. And what we're buying and operating are they're higher amenitized assets. So we have pools, we have high-speed Wi-Fi. We've got bathrooms and laundromats and mini golf and activities for kids, and how much we have at one park will depend on the nature of that park. And so we have some that are really like a one night stopover on your way to somewhere else.
Mhm.
It's not a destination area that you're going to spend 4 or 5 days, but it's a great stop for the night if you've been driving for 6, 8 hours, or it's windy or stormy and you need to get off the road. Those types of parks are going to have less amenities, and it's just a simple experience. And then we have others that are going to be, hey, I'm going to go to this area and I'm going to spend a week, and I'm going to go visit this state park or this national park or this amusement park. I'm going to do all these things. And then at the end of the day, I want to go back to the campground, and my kids are going to go play on the playground. We're putting in pickleball court and one of our expansion projects now. We used to have a game room that never really got used, so we converted that into more retail space. So we've got stores
Mm.
where you can get the basics of that you'll need for a camping trip, and then souvenirs and apparel and toys and that kind of thing. So we try and make it as frictionless of an experience for our guests. And the way that the park is set up is really going to depend on why someone's going to be there. Why are you going to go camping in this area? And then we'll design that experience around what that demand is.
Yeah, that makes a lot of sense. So can you explain to us big, broad strokes? Because I know you come from a financial background, so it's easy to get in the weeds here, but big, broad strokes, what's the business model? Like, how is the money made? How are the profits made with campgrounds?
So the majority of our parks and our revenue is coming from that short-term overnight traveler. We do have a portion of our business, and some parks are heavier in this than others, where it's long-term or extended stay. What you think they're gonna rent a campsite for the summer, and they'll come on certain weekends. It could be people that are building a house or looking for a new job or whatever, and they're coming to an area and they need a place to stay for 6 months, and we rent a site for an extended period. So um, a lot of it is that RV piece of it. We do have cabins and accommodations. A smaller subset of it is tenting revenue. But traditionally, a KOA campground is focused more on providing that experience to an RV traveler.
Okay, now from an investor side of things, how does that kind of look? Like how it's is this very seasonal? It's going to depend on the location, I would
Mhm.
imagine, but how does that kind of work cash flow wise over the course of a year, let's say?
Yeah. So one of the things that really drew us to RV and campgrounds in the first place was the cash flow.
Mm,
Unlike other real estate asset classes where there's a little bit more competition, there's more institutional investing, cap rates are going to be lower, meaning the pricing is going to be higher. RV and campgrounds is a lesser known, less popular investment. So we're able to buy at more preferential pricing than you can self-storage or manufactured housing.
hmm.
And from that standpoint, we now have instant cash flow from day one. Another big thing when you look at the short-term or transient RV guest versus a long-term, which may be more akin to manufactured housing community, where you may pay $350 a month or $500 a month plus your electric. When you boil that down to what is your daily rate, you could be paying $10, $15 a day. Well, we've got RV sites that people are paying $125, $135 a night if it's in the right market, if it's a premium site, and we'll create that luxury RV experience where you've got a patio, we've put in privacy fencing, we've put in gazebos, outdoor furniture, nice fire pit experience. There really some cool things going on in designing these. So it's not your traditional, hey, here's a piece of gravel with a picnic table. We do have those.
That's what I remember.
Well, yeah, and we do have those because that's what a lot of people want. They don't want to spend $130 a night. So they want to spend $45 a night and have a place they can hook up to power and dump their sewer tank. So we provide all of that. And because that nightly rate is so much higher, that's how you account for the seasonality.
Ah,
So we underwrite all the deals that we look at. Obviously, we have to account for, is it open year round? Is it open seasonally? We've got holding costs and debt and things that we're gonna have to pay every month. So you have to make sure that the cash flow is strong enough during the season that you're open to make sense. And traditionally, if you buy right and you're not overpaying and you know what you're doing, the cash flow on a campground is going to be traditionally higher than what you would get in other asset classes. The bigger difference is it's been hard from an investment standpoint to get into this space because there historically weren't a lot of operators that had a full turnkey investment opportunity
hmm.
where if you wanted to buy a campground, you had to move there, you had to run
Yeah,
it,
the
you were living
owner
there.
operator kind of thing.
Yeah,
Yeah.
you become an owner operator, and now there's more options. But really, what we're doing is we're providing that turnkey experience. So we've built an outdoor hospitality management company, which is the biggest challenge. It's the biggest barrier to buying this type of property. Is it's not like self-storage where you can automate it and you really
Yeah.
only have to have one person part-time that is checking on things, and you can do it all through email. And it's an experience. It's you're running a hotel, and even more than that, we're leaning in fully on how do we provide that extra level of hospitality to differentiate ourselves from other campgrounds and RV parks that people could go to. So that management piece, that the expense side of it, is a little bit heavier than in some other asset classes, certainly compared to self-storage and mobile home parks. But you make up for that with the much higher nightly rates.
So I guess more of a comparable might be hotels and motels and that sort of thing,
Yeah,
maybe.
it
Yeah.
so
Out
a
in
couple things.
California.
Yes, you could look at it as a outdoor hotel. In a lot of cases, the guests are bringing their own rooms, their own beds, their own bedding, their own
Yeah.
towels, their own bathroom.
Doing their own
So
laundry.
yeah, you're renting basically the dirt for them to park their little hotel room.
Yeah.
Now, like I said, we do have cabins, so we provide that experience. And if you've ever traveled with kids or pets, sometimes it's really hard to take a full family. plus your dogs or your cats and go stay in a hotel. Or you
Yeah,
get
fair.
there and you're in the hotel room and there's two beds and that's the only place you can sit and there's nothing to do.
Yeah.
Well, we've got cabins that have different bedrooms. They've got a family room, a kitchen, a bathroom, outdoor space, barbecues. So it provides a different type of experience that is more pet friendly. And a lot of people will come in that way. So yeah, it is much more similar to running a hotel than some of these other asset classes.
Now you mentioned early on that you focus on KOA campgrounds, and that's kind of a, is it a franchise basically? Is that what
Mhm.
that is? Okay, and I have no clue about this, Kevin, but out of I have no idea how many campgrounds there are in America. And out of all those campgrounds, what percentage would you estimate are KOA campgrounds?
So the commonly used number of campgrounds across the US is about 14,000, 15,000. I can't say for sure if that's right. Um, and this is where it gets super interesting. KOA is the largest camping brand in the country, and they're
Mhm.
in the US, they're in Canada, used to be in other countries, but there's only 520-ish KOAs.
Wow.
So what is super interesting from an investment standpoint in this is you have a very fragmented asset class where you have anywhere from say 10 to 12,000 properties that are owner operator properties. Some of them are legacy, multi-generation. Um, but there has not been an opportunity or an appetite for institutional investing to come in and gobble up a lot of these assets because there hasn't been the possibility for them to come in and buy at scale.
Hmm.
And that's what you see play out over the last 20 years with mobile home parks and with self-storage is it
Yeah.
started out that way, very fragmented. And then as bigger players started to build up portfolios, they'd get sold off to larger buyers. And then that just kind of snowballed and it compressed cap rates, values went up, and now it's a very competitive way to invest in real estate. And if you don't have the systems or the scale, it's really hard to compete in those spaces. And in the RV and the campground side of it, that hasn't happened yet. And so that's where we see a huge part of the opportunity is we can buy um, we can buy properties at we're buying now. This one that we're working on is at a 9 cap. And if you could buy a good 50-acre, 160 site mobile home park that was doing, $1.25 million in revenue a year at a 9 cap, like you would never be able to do that. And so we can buy that now. And over time, as opportunities for groups like us to build large portfolios, now there's a situation where, private equity and other institutional buyers have an option where they can come in and buy at scale. And so those cap rates will come down. They'll be paying premiums for those types of stabilized large portfolios. Now, whether that's a good thing for the industry or not, one thing it is going to do is it is going to drive values of these properties up. So if you're an owner operator and you can hold, the value of your campground is just going to go up significantly for no other reason than the asset class is going to get more attention, more investment, more capital coming into it over time.
No, that makes a ton of sense. So, what's the big advantage to being part of KOA versus just creating your own version and not having to pay the fees and whatnot?
Yeah, I think, there's two sides to that. We are heavy in KOA because the first property I bought was a KOA, and I did that on purpose. I didn't know what I was doing. I'd never run a business before, had never invested in real estate before. I was taking a big leap of faith. And I was really attracted to KOA's system and the support and the people that they had, knowing that they would help me figure it out. They
Yeah.
weren't going to leave me hanging to, have to go find how do I build a website? How do I find a good reservation system? How do I negotiate with a credit card merchant company? How do I, find the right vendors for the things that I need to put in the store? Who's a good insurance agent that understands this industry that I can work with? So they solve all of that for you. And we have built really strong relationships within the KOA world. And that's how we've grown. And most of the properties that we bought have been off market. They've been direct with the sellers. Several of them have come to us because they know who we are, they know we're buying, they know how we operate, and there's a real emotional attachment with campground owners. I'm sure that that happens in other types of assets as well. Someone could be really emotionally attached to the self-storage unit that their family's owned for a long time, but they a lot of times, and we have beat out bigger buyers in the past because these owners know they love KOA. It's been their family. They love their campground in many instances, including the last three deals that we've bought. They've raised their kids there. Their kids
Yeah.
were born in the
That's
house
exactly
on
what I
the
was thinking.
campground,
Yeah.
grew up there. All of their childhood memories were at the campground, right? Their backyard was the playground, the mini golf, the pool. And now that the family's ready to move on, they're not they're not willing to just sell it to whoever's going to pay what they want because they want to know how is it going to be run after. Like
Yeah.
they want it to be successful. They don't want it to change. They want it to continue that legacy. And that's been a differentiator for us, is being able to have those relationships within the KOA family of people who know who we are, how we operate. And that's brought a lot of, inbound deal flow to us, that's got us to where we are. And that doesn't mean that those are the only types of properties that we're interested in or that we'll buy. We've had other parks that were independent or other franchises under contract. Those deals haven't worked out for things that we found during diligence, and we think there's an opportunity to diversify our portfolio outside of KOA, because not everybody, you always have to think of the exit, right? And not
Mm.
every future buyer of the parks that we're going to be compiling, is going to want to have all KOAs. And so that's just part of the strategy that will play out over time.
What would you say is the number one frustration you have with this asset class?
Well, like any business, the biggest challenge is people.
Mm.
And, we're no different where we have challenges with our teams. We have challenges with our guests. The hospitality aspect is probably one of the biggest obstacles to success. We have to go above and beyond to provide an experience to our guests that's going to be memorable. It's going to make them want to come back. That's going to tell them or have them tell their friends, you need to go here. They're going to refer us. And so that people aspect of it can be the greatest part of the business, and it can also be the hardest part. And we've had situations where, we've had bad interactions with guests, and we've had, tough situations with our teams. And, you can't avoid that no matter how good you are. It's just part of doing
Yeah.
business. But that's certainly been and will always be probably the number one puzzle to solve is how do we create a above the top experience for our team working with KCN and being a part of our group and understanding our vision and buying in completely. And if we can do that, then they'll turn around and do the exact same thing with our guests. They'll provide that over the top experience for their guests because they'll understand the vision. We'll all be fully aligned in what we're trying to accomplish. And then, outside of that, there's other factors, economic and macro picture that impact us. Gas prices can be one.
Right. Yeah.
As inflation has been a challenge over the last couple of years where people just things cost more, they don't have as much discretionary spending. So, people still want to travel. And a benefit for us is we are always going to be the cheapest form of travel. You know,
Yeah.
Road trips are
Definitely.
cheaper than airlines,
Yeah.
especially when you have a family and people want to travel with pets. It's almost prohibitive to not drive, and so we have that going for us. And some
And
of
there
the
seems to be like a whole resurgence in the whole RV lifestyle type thing going on
yeah,
since COVID. Have you guys noticed that?
absolutely. I mean, there's
Yeah.
always been kind of a subset of the demographic that loves RVing. I mean, RVing's been a staple of American culture for decades, right?
Yeah.
And there's always been a lot of full-time RVers that travel, and you've got snowbirds, and you've got people who, take
Now
the
you got
summers and
digital nomads too now. Yeah.
yeah, and that's become a much bigger thing. And part of what we're doing is investing in the infrastructure to provide them the opportunity where we go into a park and we'll spend $30,000 to $50,000 on a brand new Wi-Fi distribution system, increase the bandwidth, and provide them with an opportunity where they can work from our campground. Their family can, go out to the pool and play, can extend their trip. That's a definitely a big thing. And COVID was a challenge when it first hit and people weren't traveling at all. But once things started to open up, our industry really thrived. Where we were the best option, the only option for traveling, where you could be outside, you could be socially distanced, you could be safe,
And
and
still
that
have
brought a
fun.
yeah,
Yeah.
you brought a lot. It brought a lot of new campers into the mix. Not all of them are going to continue camping forever, but definitely a lot more attention to just getting outside, enjoying the outdoors. Obviously, over the last little while, there's been a lot more thought about people's mental health and well-being, and how are you balancing yourself, and how do you become the best version of yourself. And being locked in an office all day and inside, I think people have just more and more realizing that there are a lot of benefits to getting outside, getting sun, connecting with the
Sounds like
outdoors and with nature.
it sounds like things have kind of come full circle for you. It sounds like you're telling your own story there, my friend, going from corporate America now to being
Yep.
self-employed and in this industry and be able to get yourself and your family outdoors. That is fantastic. Kevin, thank you so much for kind of unwrapping a little bit around investing in campgrounds. If people want to connect with you and find out more about this, where should they go?
The best place would be our website, kcncampgrounds.com. I'm on all the social networks and things, but if you go to our website, that's got the most information. You can connect with us directly there.
Kevin, thanks so much for being on the show. It's been a lot of fun.
Yeah, thank you, Dave. I appreciate it.
All right, everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.